Boom and bust cycles, while a blessing in disguise for many traders, speculators, and investors, may actually turn out to be an impediment to blockchain adoption. So I know this is kind of a strong thing to say, but I do personally hold this belief. I think that what we have now when it comes to crypto is much less so about the technology and a lot more about trading. It's a lot more about price appreciation. It's a lot more about alt season and creating tokens in order to accrue value rather than to create value. So it's a lot more about capturing rather than creating. And I think these boom and bust cycles certainly don't help. If Bitcoin, let's say, was in the ever-present bull cycle, then it would be great. Unfortunately, that's not how it works. It goes, times are really good, and then times suck, and then times are really good again, and then times suck again. And so unfortunately, what ends up happening is that we have these crazy spikes of intense and feverish pitch of interest, which then dies down to an almost deathly still during those bearish moments. So I think the first thing I'd like to say with regards to this is that if prices are constantly fluctuating, how are users supposed to use your dApp? How are users supposed to use your smart contract or your game or whatever it is if the prices are always fluctuating? If I have Ethereum and I want to be able to, I don't know, let's say play a gambling game or play, actually no, a gambling game is maybe a bad example. Let's say I want to play like Pokemon Go blockchain version, right? And it's just a pure game except it runs on Ethereum and Ethereum tracks game items or something like that, or Pokemon. Awesome, you get to verify that you have the only Mewtwo in the world. Cool. Pretty interesting, actually. That is actually a great idea. I think people should do that. Anyway, so here you go. You have blockchain Pokemon, and if I have to spend a few Ethereum to buy, let's say, a blockchain Pikachu or something, and Ethereum is $10 today, so I spent $20 on my Pikachu, and tomorrow Ethereum goes up let's say tomorrow it goes up 100% in value, right? So all of a sudden, if I have a friend, I can't really tell my friend, like, oh, this Pikachu just cost me 20 bucks. I can't tell him that. I have to tell him, like, actually, I put in 2 Ethereum or 2 Ethereum, and today it just doubled in price. So I guess it's like 40 bucks now. So if you actually want to join me in this game, sorry, you actually have to pay double the amount that I just paid. There's really nothing you can do about it. So you better just pony up. And it just doesn't, you know, I've never seen a game that fluctuates like that. I mean, this is like CSGO skins on steroids or something. And CSGO skins kind of work, but again, that's a market, right? So there's a market for this kind of thing. And maybe you can make a blockchain game like Pokemon that is more of a market than anything, where it's more price-based. But I think it removes a lot of the actual value and or it doesn't remove value, it removes the inherent kind of fun of having something that is not necessarily attached to US dollars or actual monetary gains. So I think it's certainly difficult. And then again, the other case, let's say I want to buy my blockchain Pikachu. Why would I spend my 2 Ethereum on a $20 blockchain Pikachu when I know that we're in a bull market and I can buy 2 blockchain Pikachus if I just wait until tomorrow? So I'm not going to buy any blockchain Pikachus today, right? It doesn't make any sense for me as an individual. So because we have these boom and bust cycles, I now want to wait to buy my Pikachus because I can get more Pikachus tomorrow than I can get today because of the fluctuating price. So we have the case. If Ethereum is pegged, so if you can buy your Pikachu for 2 Ethereum rather than $20, then you always want to buy it when Ethereum is really cheap. And if you buy it for $20 in Ethereum, where you do the conversion, then you always want to buy it when your Ethereum is worth a lot, because then you have to spend less and less Ethereum to buy your blockchain Pikachu. So this is really all about the boom and bust cycles. So when it's in the boom cycle, you don't want to buy, you don't want to spend. When it's in the bust cycle, it's pretty much the complete opposite. If you have your blockchain Pikachu and it's worth 2 Ethereum, well, actually, even though it was worth $20 today, tomorrow it's actually worth $10. Sorry, dude, you're screwed. I know you were counting on your blockchain Pikachu to acquire more value so you could pay your rent, but unfortunately, we're in a bear market. So your blockchain Pikachu just got screwed. Hopefully your boss accepts your serpentine. Or what is it called? Not serpentine. Dragon tail, that's the one. Hopefully your boss accepts your dragon tail. Not gonna happen. So that's the first thing. Secondly, I think it's cool that blockchain in general, so what it does is it opens up the value for individuals, right? Rather than companies. So instead of companies, we're decentralizing everything. Great. We have our blockchain Pokemon game, and what happens is the value is shared amongst everyone in the network, rather than one company being at the center of it all, being the hub of attention, and they get all of the money and they're the centralized authority. You've heard this 1,000 times. You know how blockchain works. So it's really interesting that it opens that up to users rather than the centralized actors. However, the downside of that, it also opens up the door again to speculators and markets. And if you open the doors up to speculators and markets, unfortunately, the speculators and market makers and traders and investors even, they will almost every single time, they will always outpace the actual adoption. So every single time, if you have a market now in crypto, because crypto at this point is known pretty much strictly as a market. I would say 99% of blockchain transactions on any blockchain, Bitcoin included, well, maybe not Bitcoin. 99% of blockchain transactions on any non-Bitcoin blockchain are probably just exchanges or people moving money around in terms of just money, rather than actually using an app or using a dApp. In most cases, that's almost certainly what the case is. So what we have is maybe 1% of the people are actually playing this new game or using this cool blockchain-based app. That's great. Unfortunately, that 1% is now outnumbered by 100 times as many other people who are actually using it to trade and speculate and make money. And so what happens is the market, it becomes geared towards the people using the market. So the chains become geared towards the users. So if the users are actual adopters, then great, we're going to make more stuff for these adopters. If the users are people who are always on exchanges and are always trading and care about arbitrage and things like that, then that's all of the technology and innovation that you're going to see. Some of the greatest technology that we've seen in blockchain has only to do with trading. Some of the greatest companies in the world, the most successful companies in the world, we're looking at Coinbase, we're looking at Binance, all they do is exchange. They're only exchanges. BitMEX is another one, right? Some of the biggest companies in the world. I think exchanges are essentially the biggest industry in blockchain. Why? Because 99% of the users are traders, because the traders outpace the actual market adoption. If you make an app today, or you want to make an app or a decentralized app, you are always going to be addressing, first and foremost, a trader market, before you can actually address the addressable market, which is the people you actually want to hit, your actual audience. You're always going to be almost hindered in a sense by the fact that you have to play nice with these investors and these speculators and traders. And so it's just, again, because of the speculators are going to come in and they're going to outpace the adoption, you can say sayonara to actually getting any kind of real tech adoption, because, well, we're going to cater to the traders first. So the other reason why boom and bust cycles are bad in some cases is I have personally seen it myself empirically. Businesses have come to me and they say, hey, we want to raise $10 million, which isn't much in the crypto sense. We want to raise $10 million because we're in a bear market, and even they cannot raise that much. Even I've seen $5 million raises go unraised because we're in a bear market, so no investor has any money, no one wants to invest in anything, no one thinks about the value of Bitcoin and blockchain. Everyone thinks everything's going to zero because we have this whole fear and panic and FUD and FOMO and all of these human emotions driving it, because we now have prices attached to the tech rather than just being a tech offering, and maybe you can get some equity, so on and so forth. So it's difficult from that perspective, and I've seen it myself. Businesses can't raise money in bear markets. So if you have a really cool business idea, you have to keep in mind now how the market is going to react to it, much more than if you were just making a standard tech startup. If you were making a tech startup, you know how the world is so large that it doesn't really fluctuate that bad. You know what your addressable market is generally. You know usually that you don't have to make a token. You almost never need to make a token. You almost never need to have individuals become part of the network or anything like that. The only thing you're interested in is the user, making their experience as good as it can be, and driving adoption. That's the only thing you care about in the legacy world. In the blockchain world, you now have to worry about investors, and then the investors become the primary concern. I've seen projects, hey, we want to do this really cool app. Well, we need to spend 90% of our time worrying about ICOs, and we need to worry about how we're going to do the raise, and we need to learn about KYC, and we need to get and it's just all of these resources spent and none of it is actually spent on actually improving the product, getting it to market, marketing. These things are important. None of these things are being focused on because everyone is so focused on the trading aspect of it that they can't focus on what's truly important. I am sure you, as a trader or an investor or as a speculator or as someone who knows about crypto in general, has seen it yourself. During bull markets, you love to tell people about Bitcoin. You love to tell people that you're a trader, you're an investor, so on and so forth, because there's a lot of prestige that comes with that. There's a lot of respect and a lot of status that comes with that. But during bear markets, you suddenly fall deathly silent, or in some cases you're in it for the tech, or you're not in it at all. You're just a standard investor. You invest in companies, or you're a currency trader. You don't mention blockchain at all because you don't want the stigma that's attached to it because it's a bear cycle. Because in the bear cycle, everyone hears Bitcoin and they think, oh, Bitcoin, that thing that just dropped 90%. Yeah, you're invested in that. Ha 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 ha. Not a good look, right? Not really the best party opener. So during bear markets, again, let's say in the time span of Bitcoin's existence, so Bitcoin has existed 10 years. Let's say half of that has been bull market, half of that has been bear market. Unfortunately, because of the way bull and bear markets work, because no one wants to raise money during bear markets, because no one wants to work on this stuff during bear markets, because there's no hype, and because no one actually talks about them, you basically have almost 5 years of time that we've had since Bitcoin's inception that there has been little or no real blockchain innovation. Yes, we've had some, but certainly not as much as we've had in the bull cycles. In the bull cycles, we see hundreds and hundreds of projects rise out of nothing, out of the dust, and get funded. They're all liquid, and they can actually do something. Yes, a lot of them are scams, but some of them end up turning out to be really intriguing, interesting, actually value-laden projects. These projects simply cannot survive in the bear market. So, again, the fear of the markets will, and the last point, the fear of the markets. Fear of the markets will take their grip on people who are perhaps not market-oriented. Most individuals don't know about stocks. They don't care about stocks. They don't care about trading. They don't know. They're not really invested in something like some people have their 401ks and things like that, but they don't really actively invest or worry about it or manage it. They usually have other people care about that stuff because honestly, not everyone in the world is cut out to be a trader, nor do they have to be. And so when you talk about Bitcoin, and crypto, and you want to bring adoption, because there's all of this stigma attached to it, individuals look at it and they say, well, crypto, isn't that more for trading rather than actually doing anything on it? And the answer is yes. And so if you're an individual who's never traded before, you've never bought and sold anything, you'll probably go like, well, I'm not really a trader, so it doesn't really make any kind of sense to me to look into this interesting new world. So I think I'll just leave it to the side and not worry about it because it doesn't make sense to me. I'm not an expert. So, and that's really the smart way of going about things. Do what you know rather than the other way around. So, again, boom and bust cycles, they're great when it's bullish, they suck when it's bearish, and they really suck when it's bearish because no one knows about Bitcoin. The adoption grinds to a halt. You can even look at this in terms of hash power. During bear cycles, the hash power of Bitcoin, not very bullish at all. It's usually kind of stabilizing, and sometimes it even goes down a little bit. So that means that the adoption is actually getting lower. The network is getting weaker as the price goes down, which is certainly scary. So, let me know your comments. I'm really interested to know what you guys think about this one. I haven't seen anyone mention this before in any other kind of video or article, so I'm really curious to know what you guys think. Leave a like if you liked the video, subscribe to the channel if you want to see more, and I will see you guys next time.